What's going on, everyone? We got to talk about Bitcoin here. As you guys can see, Bitcoin is at 64.4K. It's up 3.4% in the last 7 days. And as you can see here, Bitcoin is making its way up our bear flag. And as you all know, bear flags are bearish signals, the opposites of bull flags. So we are going to go over this. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. So to kick this off, we're going to go over the technicals first. So this is our bear flag. And like I said before, bear flags are bearish patterns. And we're going through this bear flag. This is the 4-hour chart. The red line right here is the 50-day moving average. And I do believe we're going to have a pullback here. Now, we are going through the bear flag. It looks like we're trying to make our way up here to that resistance at 68K, 68.5K. That's where our Fibonacci resistance is. We hit a low all the way down here at 59K. Some people are of the notion that this is a double bottom, and double bottoms are bullish signals. So as you can see here, we did hit the bottom here one, and we hit the bottom there too. And double bottoms, like I said before, they're bullish signals, just like double tops are bearish signals. So if this truly is a double bottom, then we would be bullish right now. But I don't personally think that is the case, and we'll go over why. Now, some people also seem to think that we're about to have a huge breakout regardless, right? Now we have our 200-day moving average. If we had a breakout, and let's hypothetically say we got past 68K, I think we would get stopped and rejected at that 200-day moving average when it hits it. Right now, the 200-day moving average is at 77K, but as the time goes on, eventually it's going to be around 74 or something. And let's say we reach it at that point, I feel like we would get rejected and then continue down from there if we even were bullish from here. But me personally, I don't believe we are bullish here. And there is a few reasons for that. For one, we're inside of a bear flag, right? We've had bear flags multiple times inside of our downtrends here. We had a rising wedge / bear flag. Rising wedges are like the sisters of bear flags. They're both bearish, right? And then we also, rising wedges down here, by the way, bottom right. And then we also have the ascending triangle, which was a bullish signal, but it was a bull trap. And it was trading within a bearish signal, right? So that was why that was a bull trap. And then we had the this right here, which was also another bear flag. And if you looked at this properly, you would also see that we had an ascending triangle trading within another bear flag. And yet again, that ascending triangle was a bearish signal because it was within a bear flag / rising wedge, which is bearish. So that's why that ascending triangle became a bear trap. And now what we're seeing is the same thing coming to light once again. So we're literally seeing the same exact motion here, the same exact motion. Now, if you break this down, what do you see here? You see the bear flag, and then you also see the ascending triangle. So we're also creating the ascending triangle here. Now, we could either blow past this ascending triangle and become bullish, right? And then get rejected up here, or we can just dump. But this is also an ascending triangle within a rising, or an ascending triangle within a bear flag like the other ones, right? When you look at the other ones here, you can see that they actually broke past their patterns. So this ascending triangle broke past its ascending triangle and it went up, but it only went up to the top of the bear flag, right? It broke past the ascending triangle, went up to the top of the bear flag. This is the ascending triangle, boom, and boom. I'm not going to even draw it because I don't feel like it. If you don't believe me, click off the video. But anyways, this is a ascending triangle here. I was going to start drawing it, and then I just messed up. I couldn't draw it. And then we have the second one over here. This ascending triangle is the other one, and it did the same exact thing. It broke out the top of that ascending triangle, but it got rejected at the top of the rising wedge. So I think the same thing could stand true again, right? I think if we are to break out of this ascending triangle, I think that we'll get rejected at the top of our rising wedge, well, our bear flag, which is also at 68.5K. So I think that is what we're looking for right now. If we even get out of the bear flag, or if we even get out of the ascending triangle and go up to the top of the bear flag, that's a big if, right? Now, percent our trend exhaustion. I always talk about this. When you see the short-term trend, which is the white line, far exceeding the blue line, which is the long-term trend, you see pullbacks. Another reason why I think we're just going to pull back here is because we have that percent our trend exhaustion. Like the way I'm looking at it, it might not even get up here to 68K. It might just dump right here. Now, what it could do is it could pull back right on the percent our trend exhaustion, and it could do something like that, which would look like us pulling back to this area on our bear flag. right, at 63K. And then we can make a rise back up to 68.5, right? So we're at 64.3K. So we could go from 64K to 63K. And then if the percent R trend exhaustion does something like this, where it pulls back and then continues, then we might be able to see that continuation upwards after all that, right? So that is another thing you have to be paying attention to also. But yeah, we are on the up and up here for Bitcoin on the 4-hour chart. But the real question is this percent R trend exhaustion going to pull us back? And then once it does that, are we going to intersect here and continue up, or are we going to continue down after that intersection? Which that intersection is probably going to happen right here at 63K. And then there's going to be a huge decision whether or not we're going to break out to 68K from 63, or whether or not we're just going to continue to break down from 63. That is the next thing. So wait for that pullback. And then from there, we're going to see the decision, whether it's going to be bullish or bearish. So that's how we're looking at this right now. So wait for that pullback to 63K here. Now we're also in the process. Remember this, bullish divergence or bullish divergence. When you look at this, bullish divergence is higher lows on the chart, lower lows on the MACD. When you look right here and when you look right here on the charts, what did you see? You see this low right here was a lower low. And then we printed out another lower low down here. All right. So if this is the case, if we just built bullish divergence and then we had that huge breakout, we might have another breakout. If that really is bullish divergence, like I said, we might pull back to 63K and then we might break out to 68K. So be very, very aware and cautious of that. I think a push to 68K is possible. So that's how I'm looking at that. Now let's go to the daily chart. On the daily chart, this is what makes me bearish but bullish in the short term, right? Bearish but bullish in the short term. We are building divergence, guys. We're building divergence. We're building bullish divergence. Lower lows on the chart. Lower lows on the chart with the prices. Higher lows on the MACD. As you can see here, we just create another lower low. It's going to do it the same exact thing it did here. It's going to come up here, and then we're going to have that next higher low on the MACD. And it's going to come up here, and then we're going to have that next higher low. And this is going to create the higher lows on the MACD while it simultaneously creates the lower lows. All right. So that is how we are looking at this. That's how we're going to be looking at this. And as you can see, here are the lows. For some reason, it didn't go lower low. These went higher. So maybe there's a possibility that something like that could happen. Maybe there's a possibility. So that divergence was a little bit weird. I will say that. But then the one back here was more regulated. I guess we could say regulated. And when I say regulated, it was more normal, right? We had the actual lower lows on the one back here. We had that lower low, and then we had this lower low. And then this is a new lower low. And you can see we created all three of those new lower lows with our divergence. So as you can see here, this boom, it comes up here. Now we're seeing this as our new lower low. And like I said, we'll see some buying pressure. And then we'll see some selling coming in. Then we'll see a little bit more buying. And then we'll start seeing new lower lows coming in. So it's only a matter of time. It's only a matter of time that we get new lower lows. Just let it go through the divergence, right? Just let it go through its divergence. And then eventually we will be there. Because remember, lower lows on the charts, higher lows on the MACD. We're getting higher lows on the MACD, which means we're about to get lower lows on the chart. All right, so be very aware and cautious of that. Now, this is the percent R trend exhaustion on the daily chart. This thing just now had kind of a reversal here. And what I mean by that, well, not necessarily reversal. So let's go all the way back, right? Let's bring it back. January of 2023 is when the bull market starts, right? So if we come back here and then we look back here, right, you can see where the bull market starts. January 1st of 2023. So what I want to do is I want to pull up this January 1st of 2023. What happened, right? So you can see that we had that percent R trend exhaustion turned bullish right there, right? But before it did that, it did a bunch of traps, right? It did a bunch of traps leading up leading up to there. We're in June, right? We're in June. So if we were to compare this to last June, we were in the same area, in the same position, and it looked like we were about to turn up, right? It looked like it was about to turn up. It looked like it was about to start pumping, right? We bottomed out on the percent R trend exhaustion. We got that blue up arrow showing, hey, this thing might have a reversal. And then we did have a reversal. We had it right here. But the short-term trend broke far past the long-term trend. The long-term trend did not follow it. It did at first, but it didn't do it the whole time. And the reason why I'm talking about this is because if we come over here on Bitcoin and we look at the daily chart for where we are right now, you're going to see the same exact thing on the percent R trend exhaustion. You're going to see the same exact thing because we just now broke out on the percent R trend exhaustion. So far, the short-term trend and the long-term trend are together. But all you have to do is zoom in a little bit to see what's about to happen. So when you zoom in, you can see that the long-term trend is trying to continue up, while the short-term trend is slowly but surely curving sideways. You see how slowly but surely curling sideways. You know exactly what that's going to do. That's going to make the short-term trend break out far past the long-term trend, right? This little white line here is going to continue up. But the blue line, which is the long-term trend, is going to start curving sideways here. And what that's going to do is when that short-term trend completely tops out, it's going to pull back and it's going to dump and it's going to pull back the price, right? That is the same exact thing going on the 4-hour chart. The same exact thing, right? We had the short-term trend far exceeding the long-term trend. So it pulls back. It did the same thing here, pulled back. Same thing here, pulled back. Same thing here, pulled back. What are we about to do on the 4-hour? Pull back, right? And then when you come and you look at the price, what do you think is going to happen when we have that pullback? All the way down, 50K. All right, so that's going to happen soon. All you got to do is be patient. Now, this is the daily chart that we just covered. Now we can cover the weekly chart. So on the weekly chart for Bitcoin, we're still having that pullback here. I told you it was going to intersect and it was going to pull back. I'm happy about that because it actually literally did exactly that. And I've been talking about this since like March, right? So we did it. We hit this. We pulled back. The next thing this is probably going to end up doing is starting to curve upwards. And then by the time it gets here, it's going to have like a recovery. And then maybe like another pullback here. And then we're going to have the bull market coming in. So the bull market's almost here, guys. Just wait for this last pullback. And then we're going to break out. And then we're going to do a fake out. We're going to pull back. But that's not going to be a lower low. That's going to be above the last low, right? The next lower low is probably about to come August, September, something like that. End of July, something like that, right? So we just got to be patient and wait for it. Let's see if it comes in June. I don't think it'll come in June. I don't think it'll come in June. Give it till like August, September, and then by October we should be recovering. All right. And now when you look at the MACD, same thing. Bullish divergence, higher lows on the MACD. We're about to get some selling pressure here. The next higher low on the MACD, boom, and this simultaneously creates lower lows on the chart. So when we get that next lower low, 50K. All right. And this is the weekly chart. The weekly chart's very simple. That's why I just kind of grazed over it because it's very simple. Like it's literally the perfect setup for bullish divergence, right? We're about to get that next lower low on our charts and on our MACD, our next higher low. And then we're going to have that continuation up. All right. And yeah, that's pretty much what I got for this. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this financial advice. Let's go over some user sentiment though. User sentiment. And if you guys haven't yet, hit the like button and subscribe. And check out the links in the description. One for Avantis5 for DeFi perps trading on the base platform up to 500x. And check out Chart Prime, best automated trading indicators inside of the game. So if you haven't checked out both of those, definitely go ahead and check them out. And again, we have to now talk about the user sentiment and what a lot of people are talking about inside of the market. So this person right here, he said Bitcoin has broken out of its downtrend parabola. So last 2 times it's happened, Bitcoin rallied 15 to 20%. So this person is like, look, he thinks Bitcoin is about to pump to 71 to 73K very soon. That's what this guy thinks. This is a little chart. And then you got this person here. He's like, Bitcoin is trying to break above the 65K level. If this happens, Bitcoin could see a quick 6 to 8% rally. He has his number set at 70K. That's above our Fibonacci resistance, but it's still possible for it to get above the Fibonacci. Remember, we talked about the 200-day moving average. If we do have that breakout, maybe it gets to the 200-day, 74K. So they wouldn't be wrong there, but it would still end up dumping after that. That's my opinion. That's my beliefs. Now over here, this guy says, or Gerla, could be a girl, says, zoom out when in doubt. This entire descending channel looks like a reversal and more like a giant liquidity reset. So this person is saying, look, we have a high chance of going up there to 82K. Every peak got flushed. It was 126K peak. It went down 36%. 98K peak went down 36%. 82K peak went down 36%. And now they're saying this one, we should go down a little bit more to about 50K. So they're saying if we do go down 36% from 82K peak, then we come down here to 50K, which actually lines up perfectly with my base here because we're talking about 50K as our support. the next support, the next lower low. So that would actually be correct. So I want to see if this is right, if that person's right, if 50K is really that area. And I've been talking about how 50K may be the low, the last low. So we're looking at 50K, but it could go down to 45, but we're looking at 50K for that low. All right, so yeah, Jerla, this person definitely seems like they know something is up. Now this person is like, okay, we're about to go to 57K and then to 48K and then to 55 and then to 41K. They said by July will be in 41K. So that I don't know about that. And then they said within days we'll be at 57K. So July 41K, within days 57K. So yeah, that's interesting. That's interesting. But anyways, this is all I got for you guys today. Again, hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Check out Chart Prime, best automated trading indicators in the game. Check out the link in the description for AdvantisFi and sign up for there. Help support the channel. Help me get them trading fees in. But yeah, shout out to you guys. And as always, I'll be back with another video.